Welcome to IG's Trading the Markets. I'm Angeline Ong, and with me is a very special guest, Pete Ward from the Premium Client Desk. Thank you so much for joining us.
Angeline, how you doing?
Pete, we've got this amazing client sentiment that is only available on IG. Can you talk us through how one uses it?
Yeah, absolutely. So this is something that one of our analysts puts together. And what it does is it maps the IG client sentiment against the institutional money market sentiment, which we get from the Commitment of Traders report. So that shows hedge funds, money market funds, and institutional money and how that's positioned. And then we see the wheels of the client sentiment about how our clients are positioned as well. And it's client numbers as opposed to weighted.
And let's take a look at the wheels here. So talk us through what these two wheels mean.
So you'll see on the left-hand side, you've got the IG client sentiment wheel. The outer ring is the percentage number of clients that were long or short at the start of this week. And the inside ring is the percentage number at the start of last week. So you can see where the shift is going, yeah.
And that's also key, isn't it? Because if you look at the ring, you can then compare and contrast it with the institutional sentiment.
That's right.
And so what is, let's pick a financial instrument. Let's take a look at the yen, for example. So what is this telling us?
So as we know, dollar yen rather, at the moment is ripping ever higher and higher. And traders within IG are all kind of anticipating Bank of Japan intervening at some stage with their monetary policy, and then all of a sudden it coming down. We've seen it before. They intervened when we got to sort of 150, and I think we dropped down to 130-ish. Now we're getting back to 150 and above, 154, 155, I think, this morning. Our client base naturally see that as an opportunity to sell into the rising market and hopefully catch something on the down move. But at the moment, the status quo has been very much long the dollar, which we can see on the other wheel, which is the institutional wheel, showing 81% long. Now, speaking to the desk, that a lot of that's going to be to do with the carry trade that you can get from being long dollar against the yen, and also just the fact that the dollar has been strengthening against other currencies such as
of course, because the Fed's been pushing, dialing back further.
Yeah, so it's really interesting to see that differential there between our sort of shorter, medium-term traders who are looking to sell rising markets, and whether or not they're selling them slightly too early or they catch it right and it drops down. I mean, Bank of Japan Friday is the interest rate decision.
Yes. And what's also interesting is, the positioning, whether, as you say, whether it's too early or on the nose or a bit too late. Let's take a look at gold, for example, because there's been so much happening in this space, given the geopolitics.
Yeah. So, I mean, if we look at gold, this sort of shift towards short gold is actually very interesting amongst our client base, because they are usually traditionally long gold. Everyone likes to have a little bit of gold in the portfolio, just in case, as a bit of a defensive play. But recently, with its sort of ascent that we've seen from 2,000, 2,200 up to 2,400 the other day, gold's been following that upward trajectory, and that naturally sort of tempts some clients into start selling it down. And we've seen, some people say, oh, well, has gold gone up on the back of rising geopolitical tensions in the Middle East? And whilst you could say it's certainly a factor, actually the move on gold kind of happened before those heightened tensions. And I think that was on the back of the Fed meeting last time, talking about the end of quantitative tightening. So it's an interesting one. Again, you see the institutional market actually thinks this has got further to go, and are quite largely net long, if not getting longer week on week. So yeah, interesting to see where that one will go.
This also confirms the fact that, our clients are, very quick and nimble, and they pivot very quickly to the news. And when we look at the institutional sentiment wheel, there seems to be very little in the way of a move from last week and this week.
I think that's right. And I think that sort of institutional investment is more to do with time frame. I think that's maybe more slightly medium to longer term. And also with our clients, they're trading intraday, intra-week, managing their capital, and like you say, pivoting very quickly from day to day. Whereas with this, it's more picking a macro theme and maybe staying with it. If you scan down to US tech, only about two weeks ago or so, we were at about 82% net short IG clients, and the institutional wheel was sort of 65% net long. Now we've seen that shift. Obviously, the back end of last week, we saw some pretty aggressive selling because of the geopolitical tensions. And that, I think, led to a lot of clients who had been sort of squeezed on the upside actually getting that payday and showing that, holding their nerve on that short side actually paid out. Now we've seen more of a flattening and a balancing off. And obviously we've got this week lots of earnings from big tech. But looking at the institutional pattern, that was long ever since the start of the year, and has reduced somewhat, but is still net long.
Even though, as we know, some of the AI froth has certainly hit pause.
Yeah, absolutely. Yeah, we saw a couple of bad days this week from NVIDIA, but it shrugged it off again and started trending upwards. We've got Meta tonight putting out their numbers. They had a meteoric rise from $80 to $500 now, putting on $100 on the back of the last earnings. So we'll have to see where they go this evening. But yeah, I mean, I read something earlier about the Magnificent Seven and the potential sort of slowdown in earnings growth that we might see from Q4 into this Q1. But it's still an earnings growth which is far accelerating all the other things that are in the S&P. So yeah, it's a big week. Plenty of things out there, whether it's macroeconomic data points, PCE on Friday, GDP on Thursday from the US, or it's picking those big names, Tesla last night, Meta tonight, Microsoft Thursday.
And finally, and keeping this short and snappy for Rich, so I'm going to time you.
Yeah.
How can investors, use these sentiment wheels, and also what is the buzz out there? We caught up first quarter, we're talking about activity in the indices, but not so much activity in the individual stocks. Are we seeing that move into individual stocks?
No, exactly right. Yeah, we are. We really are. We're seeing a big transfer of volume from people that were intraday trading, NASDAQ, DAX, things like that, to now looking at the crypto stocks, AI stocks. We've seen a big uptick in volumes in shares as it's become a lot more interesting. They're front and center of all of the sort of financial news and things you're looking at now, whether it's MicroStrategy, whether it's Coinbase. Got all these earnings out this week, and they really are now the sort of the key things people like to trade. Compound that with the fact that we're now putting up weekly options on the platform, which is something we weren't doing before. You can now take a view on these results, with a call option or a put option, limited risk trade if you're buying the option. And that's all accessible online now, which is great.
Thanks very much. And that's the very latest from Pete Ward, head of the Premium Clients Desk. And we'll be back with more ways and insights into the bespoke IG data and how to use that in your daily trades. I'm Angeline Ong.